We are in the middle of the most overvalued market ever. Despite the fact that we have come down significantly from the highest point on many metrics, we are seeing massive overvaluation. It's very clear that the market sees money printing as a positive note. Most importantly, they realize that the Fed is the only one who can save their investments, their retirement, and potentially their jobs. You came here for the truth, so let me unveil that for you. Today we are looking at some really good information. I got a lot to cover. I've got really good stuff all over the map. We're talking about pensions. We're talking about a stock market. We're going to look at different indicators. I'm going to show you some real stuff. I'm going to show you some technicals. I got everything. Let's begin. S&P 500 valuations. Borders denote metrics trading above their historical average. So this data happens to be from April 13th. So it's a few days old, but it will cover what you need to know. Things have actually gotten a lot worse since that point. This has been historically very high. In fact, if you go all the way down this list, you're going to see multiple instances where this is above their norm. Only a couple on here are actually below. And one of those, which I find interesting, is S&P 500 in gold terms, which is actually down 1.4%. Now this of course is always in flux depending on what you're seeing the S&P at this time and gold at that time. This is on that particular day. The point here is whether we're looking at Shiller PEs, different types of PE ratios, whether we got earnings and so on. All of these different indicators are showing us right now things are out of whack, and the market had come down quite a bit. Yes, it has come up depending on which market we are looking at. Regardless, still extremely overvalued. Here's what investors don't know. How many people will lose their jobs, how far profits will fall, and how deep the recession will be. The only thing they're sure of is that government has pumped in $4 trillion into the economy and is hell-bent on seeing it work. They are doing this on every single level. I've been covering it here. We're seeing the stimulus. We're seeing the Federal Reserve acting in every way possible. You know what's happening, and it's very clear the direction that things are heading. In this article here, they get into more of the details. They tell you the different programs. They talk to the different analysts. Of course, the analysts are all saying, don't worry about the moral hazard. Bail every single company out. Bail everything out. Throw as much money as you can at it. Everything's going to be fine later. This is not the time to be worrying about being conservative and all this nonsense, because we know they've gone far beyond anything that they have before. We are seeing now the third bailout for the farmers. Unfortunately, the small farmers, well, you're not going to get anything, just like the small businesses aren't getting anything, especially since they've already run out of that money. They're asking for more. How are they going to do this in a short period of time? They're always arguing back and forth in the Congress. You know the drill. Well, this is important because it's going to lead into all the data that I'm going to show you today. Fed effect. Central bank support helps fuel stock rebound. We've seen this multiple times in history, whether we are looking back into 2009 or whether that was certain events that have led us up to 2020. You could see the all-time high back in February 2020, and then it dropped and really hit hard at the bottom in March. The fastest drop we've ever seen in history, looking at it in so many different levels, using so many different indicators. Now this has come up quite a bit. It's been rocketing higher. Certain stocks like Amazon are doing especially well. But in general, the economy is not going in the direction of the stock market. The stock market is basically anticipating a return to normal, but that could prove to be very dangerous in a short period once the bankruptcies start to pile up. Crowding in, Fed's pledge attracts billions to largest credit ETF. This is the iShares iBox Dollar Investment Grade Corporate Bond ETF. This isn't normal when the central bank is going to signal which they're actually buying. Investors jump on top, you ruin the market. And people think, well, who cares, right? I'll just buy that. And that makes sense initially, but there comes a time when that breaks. That breaks down and you have yourself a very big problem. There's no doubt about it. You cannot control the markets in the way that they have done. It is impossible. Eventually, people will realize why that's the case. But hey, for the time being, no need to worry, right? Out of JPMorgan, global corporate profits level and cumulative losses. Take a look at the orange line. And this is funny because previously they had suggested the economy would have this V-shaped recovery. Well, at least with corporate profits, it looks like it's more of that soft V. And this is a really soft V. In this case, you're looking at all the data as it comes through and it just keeps getting worse and worse and worse. Yet the stock market is going in its own direction. We saw that actually leading up into February, how the stock market seemed to be ignoring absolutely everything. That didn't work out quite so well. You can see the severe drop. We're looking at, in the red line, the adjusted retail and food services sales total yearly percentage. It's looking bad, and we know that this is going to continue on for a while. I'll show you some more charts that are connected in with this, which, by the way, we haven't seen this drop since the financial crisis timeframe. Think about this. You still have these restaurants that are doing delivery services. Every restaurant around is now emailing out and notifying through social media. We do delivery, come in and do takeout. They're trying to get people to buy, but people are not in the mood. Yes, some of them are, of course, but in general, the sales are down dramatically. That impacts not just the business owner, but the employees working at these places. If that restaurant down the street had 5 employees, 10 employees, 20 employees, these are small businesses, and they're probably going to let go permanently at least a handful of them. The hit that they're taking right now is big. So that person gets laid off. Well, they're going to go and apply to the next place, but nobody's hiring. That's the part that people need to understand. 6 charts all at once, and I'll show you another one right after this. Essentially, we're looking at these different pieces of the puzzle. Bank of America, internal data, spending growth, retail sales excluding auto and excluding gas. This is moving down. On the next one, you've got spending at lodging and airlines year over year. That's all down. Furniture and home improvement. Furniture being down significantly. Home improvement is actually up. And it goes on, okay? You can look at this for yourself. I don't want to waste your time. This is comparing 2020 and 2019 data. The yellow line is 2019, blue line 2020. We're looking at spending on airlines in the top left, spending on lodging in the top right, and it just goes down. You can see the shapes. Obviously, comparing last year to this year, everything is down. Chart of the month, Bank of America aggregated card data, retail sales excluding autos versus the total. Spending has contracted significantly, despite the fact that people still need to eat. They still need to pay their bills. Everything is still happening technically, but in general, people are very conservative at this time. They're not going to the movies. They're not doing extracurricular activities. Everything's closed. So in the blink of an eye, things have really turned around. Consumer spending plunged in March, and you could see that with the yellow line, card spending, retail sales, and so on, all put on one chart. The levels are just brutal, and it looks to be getting worse from what I understand next month's data when it comes through, because we're always getting the delayed data. It should really paint an interesting picture. Aggregated daily spending by major category, percentage year over year growth. If we look at the very right hand side here, this is March 27th, and this on the left is April 10th. And you could see what has been happening over this period. People's buying habits are very clearly outlined on here. Airlines, essentially, nobody's buying. Okay, that's what it tells you. Lodging, same situation. Entertainment, same situation. Just go down the list. All of these different businesses are really getting hurt right now. And the longer we move into this, the further the drops are going to be. Aggregated daily spending by major categories. It just breaks it down. Travel, entertainment, spillover sectors, necessities, and so on. This is from February into April. Clearly, necessities are just getting by, but everything else is down. You can see the difference between spending at restaurants versus grocery stores. The blue line is restaurants that just completely fell to the ground, whereas grocery stores have climbed up. More people cooking at home. There's all these delivery services which are shipping the food to your houses and so on. Major change right now. So I believe I showed you this yesterday. I wanted to give you a chart that's associated with it. Moody's may cut $22 billion of CLO bonds on the losses that have been going on just over the last month or two. The list surged 52% quarter over quarter to 311 companies. This isn't good because we can expect that this will get worse very, very fast. This has grown tremendously in a period of 1 month from March into April, and that tells us that the growth at which these different companies, these different investments, different countries, in fact, if you look at Mexico, are all getting downgraded. The closer they get to junk, or the instances where they end up as junk, this is going to be a major contributing factor to the spiral down that we get with derivatives. I posted this in my community or blog section of the channel, and I wanted to make sure that I mentioned it here as well. Illinois seeks a bailout from Congress for pensions and cities. We're talking about $40 billion. I have been warning about the pension crisis for years on this channel. I've told you specifically about Illinois, and you know it. They're underfunded significantly. You look around in general, they're all underfunded. Illinois happens to be one of the worst. We had a bull market that was going on for 11 years, and you're trying to tell me that you couldn't create a system that gives these people a reliable pension. Something doesn't add up. Something stinks. This does not make sense. Countless companies are going out of business right now, and you can see the next one added to the list. 24-Hour Fitness weighs bankruptcy as the situation going on today pushes fitness industry to the brink. Obviously, they are completely closed down. They rely on people coming in, paying for those classes, paying for the services, the personal training. Maybe if they got those juice bars and all of that business that goes on there, people need to be inside of the gym to take advantage of it. In this case here for 24-Hour Fitness, that is 448 clubs. I'm sure they're not the only one that's going to be going out of business. They say they're weighing bankruptcy. We'll see what happens. Maybe one of the larger companies will come in, buy up some of the better performing clubs. This is usually what happens in a bankruptcy. It's not necessarily just eviscerated. Regardless, people are losing their jobs. It's just the way it is. JPMorgan Chase stops accepting HELOC applications, home equity line of credit, due to uncertainty. Well, here we go. This is actually something good to do because people use this very, very dangerously. Of course, I think they've already stretched themselves. It's a little too late right now, but essentially people have a nice home. Here we go. Fantastic artwork. And they use this home as an ATM. And I've been told on many occasions that this is a wise thing to do. I personally do not agree with that. If you have a home, you pay it down. You put money into it. You don't take money out of it. That's dangerous to do. You don't want to get into this trouble. People right now today are going to realize why that's the case. Because if your income stops flowing in and you lose the ability to put money into this household, it's still bleeding out. The way you gotta deal with the house, there's expenses. You've got to pay for it. But at least if you had the house paid down or you were trying to do so, this is gonna hurt a lot less. Miami Beach food banks, mile-long line of cars waiting in between luxury hotels. So they actually have more pictures in here, but you can see it. You get the luxury hotel on this side, and I expect that on this side there's another one. And the lineup of cars, if you can see, snakes all the way around. People are in trouble. There's hours and hours and thousands of cars and people lining up to get food. We've got a very serious situation that's happening all around the world today, and it is very clear right here. And to finish off the video, Northman Trader, we're definitely on the same page here. This crisis is following the same script as the last one 12 years ago. The poor get poorer, the middle class shrinks, the big boys get bailed out, and the bottom 90% gets settled with all of the new record debt. And then central bankers get the hero magazine covers. Thank you very much, Northman Trader, for sending us off. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me, so thank you very much. If you want to find me on any of the other platforms out there, Instagram and Twitter, anywhere, just search for The Money GPS. If you want to learn how to sell online, now is the right time. I have well over 6,000 people in my course, and unlike the other guys, mine is free. So definitely take advantage of it. It's available for free at theamazongps.com. The financial system is designed to keep you in the dark. Well, these two books are to shine the light on it. If you want to know the details, if you want to flip through the pages of the books for yourself, you can do so at the link in the description. If you want the audiobook instead, themoneygps.com. Every day I get the comments about why I don't provide the solutions, and occasionally I mention this at the end of the video when only 10% or so of the people are still around. This is a playlist called How To and Solutions. There are many videos there. Definitely check them out. Click on it. I'll see you there.